All right, let's hopefully you're going to find this information very, very helpful. I'm going to go over what swing trading is and how you can make money in the short term. It doesn't matter whether the market's going up or it's going down. All right, very important video. Make sure you stay to the end. And if you find this helpful, please like and subscribe and tell others. Share my videos with other people. Okay, so remember, we've got some rules. Okay, the trend is your friend until it ends. Okay. And then we're not in this to stay long. We're in this to make money. And over the period of time, usually if all these things kind of line up, you can expect, somewhere around 80%. And that means that you're going to have some trades that are going to go south on you. Now, this is not for actual stock market trading advice. This is for just general knowledge. And so I try to help people, and especially many of my students, about how to get at least some sort of idea as to what stock trading is all about. So without any further ado, let's just dive right into this. All right, now swing trades are usually they can be anywhere between 1 hour and a couple weeks. Usually it's, I don't know, less than 10 days, because that's what we're looking at. And I'm going to show you some definite indicators that you can find these things out. So we're trying to get our money in and getting our money out. And we don't care if it goes up or if it goes down. We have strategies to do both. Okay. Personally, I have some other strategies because I don't like shorting as much, but when I know the market's going to go down, I'll buy some real short-term put options on it because I like the hedge against not losing too much money. But we can talk about that, and you can even see that in some of my earlier videos. All right, so number one, we're going to look for stocks that are beat down, okay? And we're going to look for a directional strength, whether it's positive or negative. And we're going to go to our TradingView account and we're going to look at that. Now you can just sign up for free, and I will have a link in the description below if you want more indicators or more things. They do run some specials, and I'm sure that you can get some very good ideas and some other much better indicators than even what I need. But there's many indicators that you can trade from, especially when we're talking short term. All right. I'm going to go to a site called FINWIZ, and there are quite a few other ones, but I'm going to show you a little bit about how you can kind of identify some stocks, because you're going to try to figure out, it doesn't matter what stock, it just matters exactly where it sits in the whole scheme of momentum, basically. Because what do we see? We see stocks go up, and what do? And they go down, and they go down a lot, and then they go back up. And then they go down and they go up and down. All right. We got it. All right. So with that being said, since we know stocks go up and down and they have this momentum, we want to know when to buy, when to sell, when they're going to be low and when they're going to be high. And some of these other indicators that we're going to look at with the SMA 9-day, 20, 50, and 200, and the MACD strategy with an RSI with Fibonacci retracements, you're going to see that if you go through all these different steps and you just learn them, I'm going to have some links to some sites below where you can practice trading for 6 months and then see how you're doing. Okay. Especially if you're, a youngster and you're in school, and, this is also for the personal finance class at my school, since I know they do watch some of these videos. Practice, you'll get good at it, and then you can kind of adjust your niche. Because again, I'm going to look at like an SMA 9, but if I'm trading crypto, I might want that at like a 5, because it's so volatile. It goes up and it goes down, and you kind of want to know different trends. So I maybe have a 5, a 12, a 20, and a 50 with that, because remember, I'm just trying to trade short term. So you can kind of adjust these patterns towards what you're trading. But for the most part, this will work with anything that you're trading. And we're going to look at candle patterns next, and then where you enter a trade, and finally where you exit a trade. And then we'll finally look at something called gap up and gap down. So, all right, that's basically what this video is going to be all about. And again, if you like content like this and you want to learn more, just actually leave a comment down below of anything that you'd like to learn. My students have indicated that they'd like to learn this, and I know this could help anybody make money. And I'm going to show you where I've already had some trades where I'm 5 trades up and 1 trade down. And the one trade down, since I had a stop loss, I've actually made, I don't know, 5%, 8%. Okay, but I did this in like 3 days. So we're going to show you how you can do this as well. And again, this is just for educational purposes only. Of course, I need to say that. All right, let's move along home. Okay, now that I'm on the TradingView site, let's take a look at some of the indicators that I kind of adjusted for. Then we'll talk a little bit about what they represent. Over here, if we look at TradingView in itself, you can have a watch list that you have right up here that you've actually been looking at. So, you know, I do have a few that I was looking at that I made some trades with, but I'm going to turn that off, and you do that with that button right here. So that kind of turns that off. So what I'm going to want to do is I'm going to want to hide my video panel, and I'm going to want to hide floating meaning controls. All right. Okay, now what I'm going to want to do now that I exited myself out of this picture is I'm going to go to, it doesn't matter, stocks or anything like that, and I'm going to search. So let's just search something that we all know, Apple or something like that, because Apple's a big stock, and we're just going to take a look, and we're going to launch the chart. So I'm going to show you how you can put these indicators into work, and I'm going to take off all my indicators that I have. So right here, I'm going to exit that one. And you see how I get rid of them as well. So I click on this and I hit the X button right over here. And I actually had all the indicators already ready for you. But you need to see how exactly how it's done. So there's the MACD. All right, now this is exactly kind of how I'm going to have to minus that. So, okay, now we're ready to begin. All right, so how you use this. If I click on this button, I can hold and I can move it over, and I can move it over in different increments. Right up here is the 4 hour. I usually like trading off the 1 day. It seems a little bit more stable for me. All right, these are candlesticks. And what do we see? We see just what I said. It goes up, it goes down, and it goes up, and it goes down, and it goes up and down further. All right. So what are these patterns right here? How do I identify this pattern right here? And then how do I know to sell kind of like up in here? So how can I make sure that I'm making money when I'm doing this? Or if I wanted to short the market or buy a put going, oh, this is like, does not look good. Okay. So when I see something like this, okay, I know that I can actually sell it all the way down. So you can make money on the way up and on the way down. All right. So the first thing that we're going to look at is we're going to click the indicators, and we're going to hit something called SMA. When that comes up, you should see something, and I put a 9. So you can see something that says 950, 180. Okay. And it says EMA 20 buy sell. I'm going to use that one. Okay. But I'm going to change it, see, so I can match this one. But I kind of like how it has the buy sell on it. All right. You get 3 indicators for free. So we're going to go back over to here, and we're going to hit something called MACD. MACD, and it says moving average convergence divergence, and we're going to click that one. So now we've got 2 out of our 3 that we need. And the last one is RSI, or relative strength index. Okay, I'm going to explain what each one of these does, okay, a little bit later, but basically this gives us a huge mess, doesn't it? All right, now in order to do some things that I think are much more important with this, I'm going to go up here to where it says SMA 950, 180, and it says EMA 20. All right. So I'm going to leave that, but I'm going to go over here to where it says settings. And I want to change this SMA 50 to 20. And I want to change this one to 200. Okay. And actually, I can actually probably put, yeah, no, let's leave it at 20, and you could do 50, because remember, these are shorter term trades. Okay, buy, sell swings. Okay, I can go up and make sure that it's going to 5 or it's going down 3. And 3 is not bad for buy sells, but I kind of like 5 swings a little bit better. Okay, buy, sell, color bar, buy, sell, color bar, and then we're going to click OK. Now, that makes it very easy that we're seeing, oh, we're buying here and we're selling here. Okay, and until we see a turn, we usually don't do this. All right, now, how are we going to read this? Remember my red, and how do I know this? Actually, I can go back here because I did want you to see that style visibility. There they are. So my SMA one is my 9-day is my red. My 20-day is my blue. And my 3 is my white. And I don't really like that color because it doesn't stand out. I really like the 200-day to be kind of grayish. Okay, so now we can see it a little bit better. It's way up here. Okay, all right. So that's where that's at. So we're way below the 200-day moving average, which means that we've been in a very bad downward trend, haven't we? So, I mean, we can look at this over a period of time, and Apple has, if I draw, okay, basically, and how you do that is you take this button right here, and I'm going to hit the very top, and then I'm going to drag over to here. And do that. Let's see if I can drag it. There we go. All right. So what does that show you? That we're in a downward trend. Okay. So that's kind of obvious that we're not like in a positive trend like we were when we were over here. Okay. So like that's the great bull market. So this is what we're in now. So most likely things go down a lot more than, and that's kind of like about the trend is your friend until the end. And so that's why swing trading can actually really be helpful, because you don't want to stay in these things very long. All right, so I'm going to try to now lengthen this back out, which I'm trying to do right now so that we can get back to what is happening this second with Apple. All right, this is your MACD, and it does have the 9 and the 20. And usually what we're going to see is there's people that just trade off this. That anytime these two lines cross each other, we're either going to buy or we're going to sell. So it depends on what the shorter term time frame is. So let's say I don't know, and I'm going, oh man, I don't know what it is. I'm going to go over here to this, and then we'll look. All right, so it says style. It says the MACD color 0 is blue, okay, and it has the red as color 3. And here's your inputs. So what is the 9-day? Okay, that's the MACD line. Okay, so the blue line is your signal line. So in the signal line, obviously, let's take a look, okay? But that's how you can tell, and you can change your colors if you want. So I like showing you all that. So what happened right here when the blue line crossed the red line? It was approximately what? Okay, we're going to take that whole thing, okay, because it crossed right here. And let's see. Let's just see if we did a trade just with this. Okay, so we're going to buy as soon as it crossed. So we're going to buy at, looks like 139, somewhere around here. Okay, so it just crosses, and I'm on the 1-day chart. So I can actually make this go down to a 2-hour chart, and we can get a little bit better view of what's happening on a shorter term time frame. Okay. So sometimes if you're doing shorter term trades, you do want to trade on the 2-hour or the 1-hour, but you got to watch it. You can't like just sit around and not watch, or you got to put a lot of stop losses in, and we can teach you about that as well. You notice it does have a buy signal right here. Let's take a look at exactly why it had a buy signal there. All right. So when we look at this, what just happened? Okay, the blue line crossed the red line. Okay, and shortly before that, what happened? Okay, right here, we were at the bottom. Now, I'm sorry, this is the RSI. This is, okay, this means badly oversold. And this means badly overbought. So up here, you're selling, up here, you're buying. So what had just happened right here? And that's also something that I could also trade off of. Okay, when it's like at this lowest level, and this is the 50% line. So you're below 0 even at this point. Okay. And we were below 0 here. And some people might even enter a trade here because look, it crossed this line. And this is like a negative line. So that is so oversold for Apple, like at that point. So even a long-term trader, if they want to know where to enter a trade, this is a great spot right here, right? Okay, and what happened ever since then? Okay, it rose up. Now it went back down. And do we have any indications that this thing was going to fall? All right, so it went up here and then it still had some momentum. So this means how many shares were traded and how big a jump it was that day. So like look at these like little volume like buckets or something that like we filled all the way up here and we filled all the way up here. Now we're slowing down at the top. And now it's losing a little steam. And that might be even an indicator because we're going to talk about this red line right here. And that once it crosses that is when we would exit a trade. So right about there probably is when we would have got out. All right. And when we have entered, well, when it gets one candlestick, okay, usually above the red EMA. And we're going to look at that now. So there are many different types of things that you can do. You can trade like when the RSI is super low. You can trade when you have a divergence, and I'm going to show you that one too. And we don't necessarily have that on the 2 hour, but let's see if we can, well, actually we can find one. Okay. So what we want is, I don't know. I don't want you to take this personally, but I guess legs open, legs closed. Let's just say our wings open, wings closed. All right. So what we really kind of want is we want something that resembles open. And then we want something, okay, where it's going up, okay, as a general rule. And then we want this to be going down in the reverse order, okay, here. Can I put it right on here? You might be able to, where this is going downwards. Okay. So we kind of want this open like a V, and I'll kind of, let's do it this way. This whole thing right about here. Okay. And then we're going to take a look at what's happening right here. What happens if we waited and we entered the trade because we knew that we were going up and then we had a slight pullback? And so we can see that the direction is now changing with this. What happens if we did use our RSI to enter the trade? Well, that coincided exactly with the blue line coming down, touching, and moving ahead, okay, and jumping upwards. So when this thing came back down, a lot of times it bounces back up, and a lot of times it can go underneath. Now, how did we know it wasn't going to go underneath? The RSI started picking up. Now, what do you know? Okay, fine. So really, honestly, our entry wasn't here. Our entry was here on this bar that is now clear of all these moving averages, especially the 9-day. So once our rule is to enter a trade is we need one bar above the 9-day moving average. Okay, pretty simple. Now, what had happened is we're just going to stay in the trade, and this is, we're going to go back to days. Let's go into days and see how that works, because I usually trade off the day. And where was I at? Over here. I was in these days right over here. So this is the trade right here that we would have buy. And it did say buy. Okay. So you can even look at this and it'll tell you when to buy if you watch it enough. So I buy, but let's say I had to buy it at the very top at the end of the day. So I bought it at 147. Okay. Now, I'm not going to sell until I have a full bar below. You see where it says that, see how it crossed this 9-day? Right here is where I would sell. So I bought it here and I sold it there. So from here to here, that's about, I don't know. I'd have to look. Let's see. In this particular trade, if I had gotten in here, I got in at 141 and I exited, what did I say? One bar below. So it went up, it went up, it went up. Here it touched. We don't do anything. Here it touched. No, we didn't do anything. Here it touched, but it's shortening up. So right here, you're starting to see how it's encompassing. So it's hit here, it's hit here, it's hit here. It's going to break back the momentum, because what we see with everything, it goes up, it goes down, it goes up, and goes down. So at that point, that's how they came with the sell. And there was like right over here. Now, remember, this is days. Okay, we're on the day. So right here, I probably would have taken my profit out. And so we're at about 148 and we bought in at 141. So you probably made only about 5% on that trade, but you still made 5% on the trade. Now, what happens if we were like at the beginning of this trade? Okay, let's look at when we would enter the trade. We would entered it right there. Okay, when it was one bar
fully clear of this 9-day moving average. And then when we stayed in the trade, now it touched, but it was still a green buy. So I'm still in it. 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 I'm in it. I'm in it. I'm in it. I'm still in it. I'm still in it. I sell. 1 bar free and clear of that 9-day moving average. Okay. And so those are some signals that you can use definitely, okay, to make some trades and actually make some money. We can do this with cryptocurrency as well. So it really doesn't matter what the value of things is. And I can use all these different things. Let's take Ethereum. I like that better than Bitcoin. Let's go to crypto, and let's go to ETH. And we can use the same principle to trade. Now, I would change my moving averages with this. Okay, so for crypto, let's show you a crypto setup. I'm going to go like this, and I'm going to change this to a 5, this to a 12. Okay, and we're going to change this to a 50. So I'm shortening the time frames on almost everything. And this one I'm going to have 12. Okay, and buy and sell, I have it at a 5. Okay, which is highly volatile. So right here is telling us when to sell and when to buy, and this is that same thing. I haven't changed anything. Now, when should we see how this one was 1 bar below, and what do we see? Okay, should we have bought right here? Okay, when? Well, that was way down here, is possibly when we'd have a buy, but what? It never. Okay, should we buy? No, 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 no. Remember, here's your red line right here. Okay. And remember, the trend is your friend until the end. So what's happening? It's falling. So I don't want to do anything with that. I want to wait till we go here. Now I would have entered, and I could have exited like right here and basically either won or got money, or like depending on what was here, I could have lost a little bit of money. Okay, so you're not going to win every trade, but there are some techniques to do that. All right, the final thing I want to show you is FINWIZ and where to find stops. So we're going to go to something called FINWIZ, and we're going to go to that. Okay, so I'm going to something called FINWIZ. Okay, and this is just free too. I don't even log into this one. But this gives us some really good ideas and some screeners of what's gaining and what's not. Now, in order to day trade or do, like, basically that's what this is you really need volatility. So if we want volatility, we're going to need to look for it. And we want gainers, and I'm going to show you how you can screen for these things. And then we can kind of look on TradingView. Does it fit our need? Or should we just put it on our watch list and an alert? Now, remember, you may have 1 trade a week. You have 3 trades a week, but not too many. Okay. Especially, okay, if you're using what I'm saying, the simulator, the game simulator, yeah, that's what you should do. You need to do that for 6 months to a year before you even know what you're doing. All right. Otherwise, you can lose a lot of money. You could lose a lot of money. And so I don't want that to happen to anybody. I just want you to have some wisdom, because that's what education is, and knowledge is wisdom. All right. So I'm going to go I'm on FINWIZ. I'm going to go over here to, where is it? Where is it? Okay. All right. Yeah, I'm in there. I want to go to the technicals. Okay. Sometimes I click on the fundamentals. Now, what are we saying? Volatility. Ooh, what do we want? We want over. All right. Let's go over 7%. Now you can do quite a few of them. All right, so that's these right here. So we know they go up and they go down, and they're very volatile. So they can go up and they can go down at any time over in a week. Okay, over 7%. This could be a month over 10%. It depends on your trading style, but remember, what we want is short-term trades. All right, see how it says RSI over here? What do we want? We want to look for oversold, don't we? So let's go with oversold 20. Because remember, I told you that 20 and the 70. All right, so these are still in the ball game. Okay, and then what's over here? It's 20-day simple moving average. Now, what do we want? We want the price that just crossed the SMA. Now, let's see if we get any. No, we don't. All right, so we're going to have to look for something like that. Price crossed the 50. All right, see, this is where you would do that. Price 10% above, time, okay, 20 crosses the 50. Remember, when lower term time frames cross above the higher term time frames, it usually indicates direction. Okay, so now I've got it limited down to a few companies. And let's go take a look at one of them. So let's go take a look at something. Look at the volatility in this one. Remember, we want to look for a beaten down stock. All right, something like this one or this one, because they're down like 18%. So that's really bad. All right, so SFR is the ticker symbol. So we're going to go back to trading view and we're going to go up to the top, and these are stocks, and we're going to go SFR. SFR. Okay, where the hell is it? Okay, here it is right here. All right, now this is what we talked about. And this is what my final thing I wanted to tell you about gapping up and gapping down. Gapping up is when you have the last candle, like, and there's nothing in between and it goes way down in price, or it gaps up and goes way up in price. So you have this huge gap right here, and that will be filled back at some point. Now we got to figure out when that is. Now we have our indicators already up, okay, and it's on the 1-day chart. So we kind of need to see like a little snapshot of what's going on. What happened? This thing just freaking crashed. So we have to look for the news of it. And remember what I told you about right here in the RSI? Okay, this is the 50% range. We're still not there. Here was high volatility. We don't know that we want to enter any kind of position on something like this. So I'm going to drop this down to the 1-hour time frame so we can get a better snapshot of what's going on lately. See, this is on a downward trend, and it's still below that moving average, okay, the 9-day. So it never did go above it like this. Okay, but you got to watch it with trades like this. Like, the trend is your friend. What are we seeing with this stock? This stock's plummeting downwards. So we're going to want to see, and this is the bottom of RSI. So like, if I was to guess where the stock is, it has to find a bottom. And right now it's not finding any kind of bottom. It keeps gapping down here, gap down, gap down. So this is a really highly volatile stock that I probably would not necessarily take a shot at. So that high volatility, actually, we just saw why. It must not be necessarily a great company. Let's try Red Hill, because that's a bigger company, RDHL. So we're going to go to there, and we're going to go back to here, and we'll do one more, just so you have a little bit of an idea of what actually happens with these things. All right, there it is right there. It's a biofarm. Now, we're also, if you look at macro trends right now, basically pharma and medical and utilities are defensive stocks, and consumer staples are defensive stocks when you're in a recession. All right, so let's try to take a look at a snapshot of what's going on here. And I want to back out. I was like backing out and then backing in. All right, that sounds like I'm in my car. All right, now, right here, we're on the 1-day, and we're starting to be way below this 9-day, okay, average. So what are we looking at? We're looking at a trend reversal. We want to see this thing kind of go back up. So yeah, I could put an alert in on something like this. See what happened here when the blue crossed the red. We want the blue going above the red. Okay, what happened? Sell. Okay, right here. Let's go look at this. And you're just trading this. I bought it here, okay, and I could have sold it anywhere in this range. So, okay, this stock is only 46 cents. So, okay, here, I entered the trade, right? Let's take here's the 9-day right over here in this block, or this block even, okay? So I entered it here at 38 cents. And it went like this. I was still in the trade, still in the trade, still in the trade, still in the trade. And what happened? It gapped up. Oh, no, it didn't. It went below. Okay, and it went below again. All right, and then it gapped up. So this is a very highly volatile stock. But it did gap up, and that's 88 cents. So if you really would have bought here and you just held like for a while, you could have put a stop loss in, and here's your 200-day moving average. It hit it. Usually, do you see how it follows the 200-day moving average, even on a negative slope? So you would kind of know that if it hit this upward line, this is where I'd have like a sell order in, like up in here. Okay, at around, I don't know, here, since there was some support before, what do I mean? You see mini touching bars. I would have probably put it in around 70 cents. So I would have been in the trade at 49.50 cents and went to 70 cents.
So I probably would have made close to 20% on that trade. All right. So any questions you may have looking at the MACD, which is a moving average convergence divergence. And what it does is it takes in volume. Okay, so how many trades are happening that day, and versus like if it's a low trading day and in what direction it's going. So it takes all that into consideration. The RSI, or the strength index, looks at forward momentum and the speed of trading. So it actually looks at velocity, and velocity is really important when we talk about trades. So in this strategy, let's see if I'm really well. See, I was down here. Okay, this is where it hit, went way below this. All right, so let's say you bought anywhere in this range. Okay, so in this range, could you have actually made money when it actually went above? How would I have known? Okay, well, this is the highest point, and it spiked. You were getting frustrated. Okay, damn, I want to sell it. No, just wait a little longer because it didn't go below. Okay, it didn't go below. So we're in that trade. And that's how you can kind of figure out and take all these things into consideration. But actually, look at the history of it. And I'm still on the day. So remember, you want to try the 2 hour and the 1 hour as well. So we know that the trend is our friend until the end. What does this trend say? It's selling downwards. So these buys are going to be very short and in between, and you're going to be happy if you can get 5% to 20% out of your money on every one of those trades. Now, remember, a lot of times when you, let's say, buy, you're going to put in something called a stop loss. So I bought here, okay, which is at 36 cents. All right, I'm going to look at like about 2 to 4%, somewhere in there, down to like where I see support, right around here. Okay, so I was at 34 cents I bought in. I'm going to look down here, and about 30 cents or 31 cents I would sell. So if it hits, probably down to 30 cents, because sometimes, as you see, it bops down and then goes up. So you don't really want to be too tight on your stop loss. I hope you learned something from this video, and you can take that into consideration and try playing one of those simulation trading games, because it will definitely help you practice. And like I said, you want to kind of practice and kind of figure out your technique. Maybe this month, just trade the MACD and see, okay, I'm going to put in a buy order here, and then I'm going to sell when it crosses right here, sell when it went out. So you would have bought somewhere in here and you would have sold and got out 5-10%. Okay, and this one actually kind of helps you because it has the buy and sell signals on there. And I would take that and actually try a strategy like that. But you see how sometimes he bought here, then he sold here. Okay, so you lost money, but you're out of the trade and you didn't lose too much money. And so you're, like I said, you're going to win most of your trades. You're looking at that 1, 2, 3, 4, you're winning most of your trades, but you're not winning all of them. So you want to protect yourself on those losses as well. And if you do that, this can be a very profitable thing for any of you. All right, as always, I hope you have a wonderful and blessed day.